Assalamualaikum warahmatullahi wabarakatuh. First of all, praise be to Allah Subhanahu wa Ta'ala, and salawat and salam to our Prophet Muhammad Sallallahu Alaihi Wasallam. Let me introduce myself. My name is Muh Fathul Mubaraq from the Magister of Financial Accounting. With my first supervisor is Dr. Ayatullah Michael Musyafi, MAK, and my second supervisor Profesor Agung Darmawan Busdadi, MM, PhD. In here, I will present my seminar proposal material with the title The Effect of Leverage and Liquidity on Firm Value with Financial Performance as a Mediating Variable. The background from this research is the rapid development of the technology sector in the global economic landscape has made this industry a strategic sector that attracts the attention of many investors. However, the conditions that occur in the technology sector in Indonesia have actually shown quite fluctuating dynamic in recent years, especially for the period 2021 to 2024. The Indonesia Stock Exchange (IDX), through its sector index, note that IDX Techno was one of the worst performing sector from 2023 to August 2024, with a decline of 1,172.3 points or 35.92%, making it the sector with the largest decline among 11 other sectors, which of course will have an impact on company value. The author got this data from the source News. The declining performance of technology stock also reflects the decline in market perception of the company intrinsic value, which in the study is measured through price to book value (PBV). The low PBV value of several large technology issuers such as PT, DCI Indonesia Tbk, DCII, which experienced a decrease in PBV value in 2024 by 11.91 from the previous year, is inversely proportional to the PBV of PT Multipolar Technology Tbk, which increased dramatically in 2024 by 53.1 from the previous year. This is certainly an anomaly in the midst of the condition of technology sector companies experiencing a decrease in PBV value. The author got this data from the source www.idx.co.id. And then problem formulation from this research is research conducted by Aziz and Kartajumena 2024 revealed that leverage positively affect the value of technology company, while research conducted by Putri et al. 2023 revealed that leverage does not affect firm value in the technology sector. Based on this condition and contradiction in research in the technology sector, this study is designed to explore more deeply the relationship between leverage, liquidity, profitability, and firm value in technology sector issues listed on the IDX during the 2021 to 2024 period. And then research question: 1. Does leverage affect company value? 2. Does liquidity affect company value? 3. Does leverage affect financial performance? 4. Does liquidity affect financial performance? 5. Does financial performance affect company value? 6. Does leverage affect firm value through financial performance? And the last, does liquidity affect firm value through financial performance? Research objective: 1. To test and analyze the effect of leverage on firm value. 2. To test and analyze the effect of liquidity on company value. 3. To test and analyze the effect of leverage on financial performance. 4. To test and analyze the effect of liquidity on financial performance. 5. To test and analyze the effect of financial performance on firm value. 6. To test and analyze the effect of leverage on firm value through financial performance. And the last, to test and analyze the effect of liquidity on firm value through financial performance. Next, benefits from this research. First, theoretical benefits. This research is expected to enrich scientific studies in the field of financial management, especially regarding the relationship between financial structure, financial performance, and firm value. The findings of this study can be an academic reference for future research interest in similar topics, especially in the context of the technology sector, which is very dynamic and prone to market volatility. Second, practical benefits. The study provides useful information for the management of technology companies in formulating financial strategies, especially in managing capital structure and liquidity to increase profitability and attractiveness of the company in the eye of investors. In addition, the result of the study can also be taken into consideration for investor and capital market analysis in assessing the performance and prospect of technology companies based on relevant financial indicators. And third is policy benefits. For capital market regulator and financial authorities, the study can provide input in formulating policies that support the stability and growth of the technology sector in Indonesia, especially related to strengthening the transparency of financial statement and healthy corporate governance. Next, theory review. Signaling theory. Signaling theory was developed by Spence and states that companies provide signals to the market through financial and non-financial information to reduce information asymmetry between management and investors. Putri et al. 2023. Signaling theory states that company management has access to more in-depth internal information about the company's condition, and they tend to convey this information to potential investor in an effect to encourage an increase in the company share price. Putri et al. 2022. Thread of theory. The thread of theory, introduced by Modigliani and Miller in 1958, state that there is an optimal point in the use of debt by companies, where the value of the company can be maximized through a balance between the benefits of tax savings and the risk of bankruptcy costs. Anita et al. 2023. In this theoretical framework, each company is believed to have the most efficient capital structure. When the companies use debt at an ideal level, they can take advantage of the debt tax shield, which is a reduction in tax burden through the recognition of debt interest as an operating expense, thereby lowering taxable income. Anita et al. 2023. Firm value. A firm value is a reflection of investor perception or assessment of the performance and future prospect of a business entity. Amelia et al. 2025. According to Sari and Ilmi 2024, the main goal of a company is to optimize its company value, which is generally reflected through the stock price. In study, firm value is measured using the price-to-book value method. PBV is calculated by comparing the company's stock market price with its book value per share. The main reason for using PBV in this study is because PBV has high relevance in assessing technology sector companies that tend not to have large fixed assets, but have high growth potential. Brigham and Houston 2014. The technology sector also often does not generate consistent net income in the short term due to high development and upfront investment costs. So other valuation methods such as price to earning ratio can be less representative. Brigham and Houston 2014. On the other hand, PBV still provide an idea of the market value of company's net worth, even when the company has not yet made a significant net profit. Brigham and Houston 2014. Next, leverage. One of the main indicators to evaluate the extent to which a company's assets are financed through debt is the leverage ratio. This ratio reflects the proportion of debt used by the company in supporting its operational activities. John Finn et al. 2024. Based on the capital structure theory proposed by Modigliani and Miller, the use of debt in the company financial structure can affect the value of the company as well as the cost of capital borne. In developing countries like Indonesia, where access to financial and interest rates are volatile, leverage has two sides. On the one hand, it provides opportunities for growth, but on the other hand, it carries risks that must be managed carefully. Rahmanto et al. 2024. The reason for using debt to equity ratio in this study is because there is considered the most representative indicator to measure the level of leverage, especially in the context of technology sector companies that may have high working capital requirement but do not always have large fixed asset and collateral. According to Brigham and Houston 2014, debt to equity ratio signals to investors and creditors about the company's level of financial risk, namely the company ability to meet its debt obligation using its own capital. Liquidity. Liquidity is the ability of a company to pay off certain financial obligation that must be resolved immediately. Yuda et al. 2022. The concept of liquidity describes the extent of management performance in managing the company's working capital derived from short-term liabilities and available cash balance. Artanti and Rahmiati 2022. According to Kashmir Insari and Ilmi 2024, there are two possible results of this ratio assessment. If the company is able to pay its obligation, then the company is categorized as liquid. While if it is unable, it is considered illiquid. In this study, the company liquid is measured using the current ratio method, which is a ratio that compares current asset and short-term liabilities. The author chose this method because it has simplicity of calculation, consistent data availability in financial statement, and has become a standard measure widely used in financial analysis. Brigham and Houston 2016. And then financial performance. Financial performance is the result achieved by company within a certain period of time based on predetermined standard or benchmark. Financial performance assessment is crucial because it includes key aspects such as the amount of asset, profit level, liquidity, and debt burden, which overall reflect the company financial health. Ramadanti and Dara 2022. According to Putri et al. 2022, financial performance is a comparative representation of a company financial condition, which is obtained through an analysis process using various financial evaluation instruments and methods, such as financial ratio, income statement, balance sheet, and cash flow. In this study, a return on asset is used as an indicator to measure the company financial performance. ROA was chosen because it is able to describe the extent to which the company can generate profit from all its assets without considering the funding structure, debt or equity. Brigham and Houston 2016. And then research framework and hypothesis development. From this page we can see the research framework, and then the author gets hypothesis development. First hypothesis is leverage has a positive effect on firm value, and then liquidity has a positive effect in firm value. Leverage has a positive effect on financial performance. Liquidity has a positive effect on financial performance. Financial performance has a positive effect on firm value, and then leverage has a positive effect on firm value through financial performance. And the last, liquidity has a positive effect on firm value through financial performance. Research method, data type, attribute quantitative, search www.idx.co.id, and from company website, population and sample. The population in this study is the number of technology stock sector companies listed on the Indonesia Stock Exchange (IDX) during the 2021 to 2024 period, totaling 47 companies. In this study, a non-probability sampling technique with a purposive sampling method was used. And the sample in this study was found to be 24 companies that met the criteria. Data collection technique. The technique used in collecting this data is the documentation technique, in the form of financial report from companies that have been published. This technique was chosen because the data needed is historical and openly available on the official IDX website and the page of each company. Next, operationalization of research variable. Firm value process by price to book value. Definition, the ratio of market price per share to book value per share. Measurement, market price per share to book value per share. The source by Astawinetu et al. 2023. Next, leverage, proxies by debt to equity ratio. Definition, this ratio reflects the proportion of debt used by the company to support its operational activities. And measurement is total debt to total equity. And then liquidity, proxies by current ratio. Definition, the company's ability to pay current debt using current asset owned. Measurement is current asset to current liabilities. And the last, financial performance, that proxies by return on asset. Definition, the company's ability to manage its asset for profit. Measurement, net profit to total asset. Next, data analysis technique. This research utilizes the partial last square PLS analysis method with the help of Smart PLS for software as a data processing tool. And the statistical method was chosen because it has the advantage of analyzing complex relationship between variables, including mediation and moderation effect. Rahmanto et al. 2024. Because all variables in this study are latent variable measured through a number of indicators, the analysis of the relationship between variables is carried out using the partial least square PLS method through the help of Smart PLS software. Novianti and Wijaya 2024. PLS itself is one of the multivariate statistical technique that aims to analyze the relationship between several independent variables and the dependent variable simultaneously. Abdillah and Hartono 2015. This method is very appropriate to use when research face certain obstacles, such as limited sample size, the existence of incomplete data, or the presence of multicollinearity in multiple regression. Abdillah and Hartono, 2015. PLS is also used to test the effect of independent variable on the dependent variable while providing an overview of the theoretical relationship that occur between these variables. Variant-based structural equation modeling, SAM, model testing is carried out with two types of approach, namely measurement model and structural model. Validity and reliability testing is carried out on the measurement model, while hypothesis testing is carried out through structural model. Abdillah and Hartono, 2015. Next is outer model. First, validity test. Validity tests aim to evaluate the extent to which research instruments are able to measure the variables referred to in the study. Abdillah and Hartono, 2015. In convergent validity, the basic principle is that indicators that represent one construct must have a high correlation with each other. An indicator is said to meet convergent validity if the loading factor value is more than 0.7, commonality value more than 0.5, and average variance extracted more than 0.5. Then reliability test. In the partial least square PLS method, there are two main approaches to testing reliability, namely Cronbach alpha, which is used to assess the minimum limit of reliability of a construct, and composite reliability, which measures the actual reliability of the construct. A construct is considered to meet the reliability criteria if the Cronbach alpha value is more than 0.6 and composite reliability has a value more than 0.7. Abdillah and Hartono, 2015. Next, inner model. Evaluation of the dependence construct in the structural model is done through analysis of the R quadrat value, while testing the significance between constructs is analyzed by looking at the path coefficient or T statistic value. Abdillah and Hartono, 2015. Significance of determined based on the T statistic value, which must be more than 1.96 for a two-tile test and more than 1.64 for a one-tile test with an alpha of 5%. Abdillah and Hartono, 2015. Mediation test. Mediation testing aims to determine whether the mediating variable has a role in bridging the influence between the independent variable and the dependent variable. Abdillah and Hartono, 2015. In this analysis, the significance of mediation is seen through the total effect table, because the mediation effect includes both direct and indirect effect. If the T statistic value in the total effect table more than 1.96, then this indicates that the mediating variable is able to fully mediate the relationship. However, there is an important rule in the mediation test that the mediation effect can only be analyzed if the direct relationship between the independent and dependent variable is proven significant. If the direct relationship is not significant, then testing of mediation effect cannot be continued. Abdillah and Hartono, 2015. And the last is Importance Performance Map Analysis, IPMA. According to Hare et al. 2021, Importance Performance Map Analysis is a data analysis technique used to see how important a variable is and how well it performs against desired outcomes. such as satisfaction or company value. In IPMA, variables that have a major influence on the result, high importance, but have low performance become the main focus for improvement. Hire et al. 2021. Thus, IPMA helps researchers or managers in prioritizing the most impactful improvement. This method is usually applied in partial large square structural equation modeling (PLSM) analysis, and the results are displayed in the form of two-dimensional graph that shows which variable should be the main concern. Hire et al. 2021 and Ringel et al. 2019. So that's all my presentation. Sorry for all mistake. Assalamualaikum warahmatullahi wabarakatuh.